All right, welcome back to Fast Money. Let's now get you the very latest on the virus outbreak. The death toll here in the United States rising, does now stand at 6 with 105 confirmed cases nationwide. And the White House is loudly calling on Big Pharma to step in to try to help. Meg Terrell at CNBC HQ with more. Meg.
Hey, Brian, the president and the coronavirus task force meeting with the CEOs of major drug and vaccine makers, Regeneron, Gilead, GSK, Moderna, and research chiefs from Pfizer, J&J, and Sanofi Pasteur. The president trying to get a sense of timelines from these companies. We spoke just now about that with Sanofi Pasteur's Dr. John Shiver, who had just come out of the meeting.
We hope to have a vaccine in the clinic within a year or so, and hopefully, move quickly into development past that towards a product. As we all see how the outspread of coronavirus changes or grows.
And our Eamon Javers asking the president if he'd consider allocating additional funds to the pharmaceutical industry to speed the work. Trump jokingly responded, the industry has too much money already, underlying some of the tension from a president who's persistently attacked the industry for its high prices, saying they're getting away with murder, now depending on that industry to speed a vaccine or drug to market. Brian?
All right, Meg Terrell. Meg, thank you very much. So, guys, let's talk about some of these biotech names. And let's be clear. We made screens. There's two different types of companies here, Guy. There are the Regenerons, the Gileads, the Pfizers. These are huge companies that have real research scientists doing this stuff. And then there's the small super micro caps that are just being traded by traders around this. You got to be careful out there.
And I'm going to avoid speaking about any of those micro caps. But we'll talk, for example, Gilead. I mean, Gilead was headed higher before coronavirus. If you go back and look, this is sort of the tailwind for them on what had been a story that was improving with a balance sheet that had been improving. So Gilead makes sense. I think Pfizer, to your point, Pfizer had been beaten up. That makes sense. Merck's had a move from, I think, 95 down to 79. That stock has bounced. That makes sense. Eli Lilly's its own animal. So I think big cap pharma, despite what the president says about them being too rich or ripping people off, I'm paraphrasing, I still think those stocks are fine. And again, in terms of a vaccine for this, they're talking about something a year away. Hopefully this is going to be long over before that. Quickly, there was a scene, if you recall, in Top Gun when they were trying to get Tom Cruise up on Ready 5, and one of the guys came and said it's going to take a few minutes, and the commander on the ship said an expletive, this will be over in 2 minutes. That's the same thing here. You don't have a year to play around with this, in my opinion.
By the way, Guy, your ego's cashing checks. You're writing checks your body can't
and
cash.
I can't wait for Top Gun 2 coming out this summer.
Gilead also stepped in and had a $5 billion acquisition today of 47, which increases their presence in their oncology and hematology. The issue with that for a lot of the analyst community, from what I've read, is that it doesn't necessarily move the needle on their $20 to $21 billion revenue line, which is something that they're very concerned about and has been dragging Gilead down, because HCV and HIV are still things that are looked to be at least drug pipelines that are slowly dwindling. So, again, I agree. Biotech had been outperforming this year, had actually been, along with healthcare, a place where investors were actually continuing to find both valuation and earnings, and I think they will.
Yeah, if you look at how IBB traded as well, I mean, it actually is fairly constructive. Bounced off the 200-day moving average. It's had a very big day here. I think in this environment, though, you can wait for this to break out above 125, rather than trying to be a hero and buy it on a down day.
Well, do you want to go the ETF route or just go the individuals? I mean, Regeneron's up 37% in a month. You got Biogen up 21% a month. Gilead up 19% in a month.
Well, the IBB gets you. Gilead is because the biggest.
You buy
those
the big
are big,
ones,
right? And then the XBI also gets you more biotech. I mean, to me, unless you really, really are deep in the weeds, if you're going to be playing for some sort of, vaccine, or you got to go with one of the indexes.
Okay. Well, maybe the group getting hit the hardest in all of this from the coronavirus outbreak has got to be the airlines. The sector is down more than 20% in the past week. Many names simply missed out on today's record rally. The Jets ETF actually finished down 0.5%. Spirit Airlines, JetBlue leading the losses. Tim, has the selling been overdone And is maybe there's some value in this just absolutely crushed sector?
I think it's overdone in a handful of names. And to be clear, the entire sector should not be treated the same way. And I think there's financial stress that will be coming through the sector. Dan made a great point on Thursday or Friday when he said this is a sector that's been gone in bankruptcy a couple different times. I think airlines are run differently. I think Delta Airlines does not have the same kind of financial stress that an American Airlines and much operational leverage in addition to financial leverage. So what people aren't talking about is where actual EPS in the short run might be more than made up for by fuel costs. Now, I realize that's not a reason to re-rate airlines, and in fact, the market rarely does. But I do think in the case of Delta Airlines, because of their operational leverage, is one of the places where, again, the reduction in revenue per available seat miles, RASM, offset by the cost, or essentially on the other side is something isn't going to get a lot better for airlines in the short run, but you've taken 26% off of Delta.
Yeah, it is. So by the way, just before you jump in, Karen, I did a report on that today. The end of the year, jet fuel costs in the Gulf Coast $2.02 a gallon. It's at $1.65 today. It's a 17% decline. Delta spent $8.5 billion on jet fuel last year.
Deal.
So you take that, you take 17% off, at least in the short term, off that $8 billion number for American, United, and Delta. They all spent about the same, by the way. That should balance out some of the pain on the lost traffic.
And I'll just say it again, though. Unfortunately, the market never does this for airlines. So I don't think this is a reason to go in and buy. I think it's basically to look at the existing EPS cuts and wonder where there's actually a bit of value here.
So for me, I'm long some of the airlines, and I always look for things that I want to buy more of when they trade down, and this actually isn't one of them. I mean, I'm thinking about the most severe travel disruption that I've ever seen was 9/11, and I don't think this is anything close to that, and the balance sheets, as Tim said, are in a way, way different place. However, the business model is such that each new passenger is such high margin, right? They have a lot of fixed cost. And so when you get all these cancellations or you're flying at very, very low, the utilization is down dramatically, that's when you're really going to get just crushing earnings that I don't know how quickly those will come back. If this persists in the U.S. for another 2 months, that's really going to start to eat into travel season, which obviously is huge for the airlines. So I'm concerned about that. This is not a 01 where they all went bankrupt. This isn't that. But I am concerned about the business model and how quickly, when capacity's down, it gets crushed.